did I do that? Why? Come on, man. Welcome to the Patrick Lane Show, where we talk about real estate, business, and investing. Do me a favor and hit the like button right now so you don't forget about it later. And also hit the subscribe button. It would really help me out. So today we're going to talk about my biggest investing mistakes from 2020. We're just a couple of days into 2021, and it's nice to look back and see what did we do right, what did we do wrong. And so today we're talking about the biggest investment mistakes from 2020. Well, 2020 has been rough for everybody. Obviously, the health situation created a lot of problems for families, for individuals, for businesses. And the real damage, though, was done by the forced economic shutdown. So back when it all started, everybody was rightly worried and concerned about how everything was going to proceed, whether we were going to get our health taken care of at the time. And so as sort of a reaction, and now maybe looking back, an overreaction, the government shut everything down. You couldn't work, you couldn't go see your friends, you couldn't do any of that stuff. And so what happened was everybody got hit financially, economically, including us. So most businesses, even especially healthy businesses, small mom and pop shops, which we are, get shut down. Well, how do you recover from that? What's the psychological effect of going through that? We'll talk about that in a second. But in the face of all this, keep in mind that year to date, the Dow Jones from January of last year to the end of the year in 2020, the Dow Jones is up 6.26%. So while everybody on Main Street was hurting, the Dow was going up. In fact, from the low in March, when everything tanked and everybody had their worst outlook for investments, the Dow Jones is up 68%. The S&P, 15.74% year to date. So year to date, up almost 16%. And the S&P from the low in March is up 71%. And individual stocks pop too. Tesla, oh my gosh, Tesla is up almost 1,000% since March and at its lows. Imagine putting $10,000 or something in Tesla back in March when it was super low at the bottom. And more directly attributed to what happened this year, Moderna, right? The company that came through with the vaccine, that had developed the vaccine within 2 days of knowing what was going on. Moderna in January, on January 7th, was $17.68 a share. Nobody had really heard about it. A week later, they had already developed the vaccine and told the National Institute of Health about it. And guess what? Now Moderna is at $178.58. Tenfold. And how about real estate? You know, everybody was worried about real estate because there had been all of this building, there had been all the high-end luxury stuff on the market, but there really wasn't anything at the middle income level. But with interest rates at all-time lows because of the Fed actions, the Feds cut rates to zero and kept them there basically with no end in sight. Everybody is buying real estate, which means that the prices are popping. So if you had bought in back at the beginning in January, February, March, you'd be seeing great returns on your real estate right now. And whether it's fix and flip, whether it's buying to live in with a 3%, 3.5% down, or whether it's small business rates that are in the fives. I mean, how do you, before this, it was real estate investor rates were in the 6, 7, 8, 9 range for a buy and a fix and a flip and a hold for rental value. And now they're down in the fives. Now, they took a break. Some of those lenders were in the middle of this, didn't know how to assess the risk and didn't want to lend to investors. And so they sort of hit the brakes and took a pause for a while. But after 60 days, 90 days, 120 days going through this, they realized that those rates were going to stay low, and investors were looking for sort of safe harbor investments, and real estate has always been a great safe harbor investment. So the lenders who lend to real estate investors, whether it's flippers, rehabbers, people who do the BRRRR method, or just people who want to buy a fixed up property and hold it as a rental, they decided they were going to get back into the game and start lending. And so we saw rates come down from the 8s and the 9s in January to now they're in the mid 5s for investors even. So there was a lot of turmoil in the short term, a lot of turmoil, and there still is, frankly. We're still not really sure about what's going to happen, number one, with the economy. Number two, how long is it going to take to get the vaccine rolled out? Number three, when are people going to return to the patterns that they had before for living their lives, going to movies, going to restaurants, doing those sorts of things? So what was my personal biggest mistake for investing in 2020? Well, it was not hitting the like button and the subscribe button. So go ahead and do that so you don't make the mistake that I did. But really, our reaction was to the whole situation that was going on. Our reaction was much like a lot of people's reaction, I think, is we weren't sure how it was going to hit us. We basically got shut down in March. We had to travel in March for a family function. When we came back, everything was changed. I mean, we went on a Thursday or a Friday. When we came back over the weekend, our state was shut down, school was canceled, everything had been upended in just that short 48-hour period that we were gone. Businesses started shutting down, businesses started really struggling. And we were in the same boat because we knew the type of business that we're in relies on other business owners. We provide services to those other business owners. And so without that, we don't really have the opportunity to grow and be financially stable either. And so that trickles. We're in a business that was deemed essential, but when your clients' businesses are not deemed essential and they've got to shut down, that creates problems. It flows through the economy. So frankly, we were very scared. Our mindset was very worrisome. So we hunkered down. We just sort of, circled the wagons and tried to figure out the best way to manage and just get through and survive to the other end. Of course, this is back when we were talking about, the 15 days to flatten the curve and 30 days to end it and all of that sort of stuff. And now looking back, it's, that really didn't come to fruition at all. And so when we thought we were going to hunker down for a couple of weeks or 3 weeks or a month, we decided, you know what, let's just not spend. Let's not take on any risk that we don't need to. We're just going to sit on whatever cash we have. We're not going to make any investments. We're just going to try to manage our way through it, and we're going to help our clients manage their way through it as well. And so that was the mindset that we had in March. The problem is that March turned into April, turned into May, turned into June, turned into July. It went through the whole entire rest of the year. And we were still hunkering down. That's the problem, is our mindset did not change from March when we were scared, we were worried, we were concerned, and we hunkered down for that 15 days to flatten the curve. We didn't adjust what we were doing after that. So our biggest mistake in 2020 was sitting in the corner, curled up in a ball, sucking our thumb, worried about what was going to happen and how we were going to get through the next few days. But that mindset infected us through March, through April, through May, through June, all the way to the end of the year. So we didn't really do any investing. And that's the biggest mistake. We missed out on all of the run-up. We missed out on the rise of the Dow Jones. We missed out on the rise of the S&P. We missed out on the rise of individual stocks like Tesla and Moderna. We didn't get those. a lot of people saw it. They had the ability because they were, they're at a higher financial level or they just have better insight. They jumped on it and they rode that wave. But a lot of us were in the boat that we were concerned and worried, and we just didn't want to take any risks. And when you don't take a little bit of risk, you miss out on the upside potential return. And that's the boat that we're in. That's the biggest mistake. So 2020 is over. Now what are we going to do? Frankly, we're sick of sitting in the corner. we don't want to do that anymore. We want to make wise investment choice. And so the plan is now for 2020, number one, we're going to like the channel or the video. We're going to subscribe, right? So that's the first bit of advice. Go ahead and do that. Make sure that happens. So we're going to take an all of the above approach. That's our investment approach for 2021. Is we're going to look at real estate that we can invest in. We're going to look at the best individual stocks that we think are going to pop and move up. We're going to look at two kinds of stocks. Number one, we're going to look at growth stocks. So those would be the things like the Teslas and the Modernas and things that we think are going on an exponential curve of growth over the next year to 18 months, right? The other kind of stocks we're going to look at are sort of the buy and hold, long-term investments, slow, steady climbing stocks that are going to be good value stocks for the next 10 to 15 years. So those are the two kinds of stocks. We're also, of course, going to look at index funds because that's one of the best things that you can invest in. If we don't know anything about stocks and we can't pick individual stocks, which, a lot of us, there's thousands and thousands and thousands of stocks out there, and we've got real jobs and we've got kids and we've got things that we've got to do during the day. We can't spend all day picking out one or two stocks that we think are going to go gangbusters. So a lot of times people will look at index funds, and we're going to look at those too. We're going to find the best performing index funds, and we're going to invest in those as much as we can because they cover the entire market. So, an index fund is created really to give you a broad exposure to the entire market. So if one or two stocks go up or down and you hold those, then that's where a problem can lie if it goes down. But if you have a basket, an index fund that's got 100 stocks in it or 1,000 stocks in it, then if one or two go up or down, it's not as bad. So we're going to look for index funds that have great returns and low costs. So now, at the same time, we've got to grow our normal everyday businesses that we have too back to where they were before all of this started happening in 2020. I mean, we were coming off of a really good growth year in our business. We thought, looking at the end of 2019, looking into 2020, we really thought that 2020 was going to be a breakout year for our business. And then, of course, January happened and everything was still sort of humming along. And then right when we expected it to pick up, we had some deals in the works and things that were ready to go. That's when everything happened and it just shut down. And so we've got to really, at the same time that we're looking for the passive investments, the wealth building investments, those sorts of things that we talked about, real estate stocks, index funds, etc., we're also going to have to focus on building our business back to where it was in January of last year in 2020. So that's it. We're gonna get our financial house in order. We're gonna get off of the sidelines, and we're gonna get back into the investing arena. And we're really gonna try to make 2021 the best year from an investing standpoint, a financial standpoint that we can. Luckily, our family did not suffer as much as a lot of families did in 2020, and so we're thankful for that. And we really wish that it had been a better year for everybody, but we're going to go into 2021 with a focus and an energy of trying to make 2021 the best year that we've seen all around for our family, for our finances, and setting everything up for the future. So that's it. That's the plan. We hope that you will join us on this. Let's do it together. we can all share our experiences and build our wealth, build our finances, build our investments together. And frankly, why don't you leave down in the comments below if you see this video and tell us what your plan for 2021 is. Are you going to invest in stocks? Are you going to invest in real estate? Are you going to open a business? What are you going to do to make 2021 the best investment year, the best wealth building year that you could have? And let's all go on this journey together. So that's the plan. And if you would, seriously, I know I made a joke about it, but if you could hit the like button, the subscribe button, that would really help out with the YouTube algorithm. We're trying to, this is part of our journey, is kind of documenting everything that's going on for this 2021 year. And we'd like to invite you to come along with us, and maybe we can learn something from each other. So until next time, it's a great day to have a great day. So let's go get it.